Why are there not more people talking about China losing billions daily in the West Philippine Sea? China, with its insatiable appetite for power and resources, has laid claim to almost the entirety of this sea. The infamous Nine-Line marks its expansive territorial ambitions, a claim that has been met with resistance from neighboring countries and international bodies alike. This aggressive stance, however, comes at a steep price. The economic repercussions of such a bold move are significant, affecting not just China but the entire region. The uncertainty and tension have a chilling effect on investment and trade. Every day, China bleeds billions of dollars in its pursuit of dominance. The financial strain is evident, with markets reacting to the instability and businesses grappling with the fallout. The cost of this ambition is measured in economic downturns and lost opportunities. The economic dragon is facing a financial catastrophe of its own making. The stakes are high and the consequences are far-reaching. The pursuit of control over the West Philippine Sea is not just a geopolitical gamble, but an economic one as well. Control over the West Philippine Sea offers not just economic but also strategic leverage. The ability to influence trade routes and access to resources gives any nation a significant advantage. For China, this control is seen as essential to its long-term strategic goals. China knows this, and its actions reflect a dangerous gamble, a gamble that threatens regional stability and its own economic well-being. Military drills and strategic meetings underscore the seriousness with which China approaches this issue, but the risks are immense. The world watches with bated breath as tensions rise and the financial toll mounts. Global leaders are acutely aware of the potential for conflict and the economic ramifications that could ripple across the world. The West Philippine Sea has become a focal point of international concern, leaving one question unanswered. How much is China willing to sacrifice for its maritime ambitions? The future of the West Philippine Sea remains uncertain, a stormy horizon that holds both promise and peril. The decisions made in these waters will shape the economic and geopolitical landscape for generations to come. China's claims in the West Philippine Sea are as sweeping as they are contentious. This vast body of water, rich in resources and strategic importance, has become a focal point of geopolitical tension. Beijing asserts sovereignty over a vast expanse of the sea, encompassing areas claimed by several other nations, including the Philippines, Vietnam, Malaysia, Brunei, and Taiwan. These overlapping claims have led to a complex web of disputes, each nation vying to protect its own interests. This assertion is embodied in the infamous Nine-Line, a demarcation etched onto maps that has no basis in international law. The Nine-Line, which stretches deep into the maritime territories of other nations, is a source of constant friction and controversy. To enforce these claims, China has engaged in a campaign of intimidation and coercion. The Chinese military's presence in the region has grown significantly, with frequent patrols and military exercises designed to assert dominance. Artificial islands have been constructed on disputed reefs, equipped with military installations and airstrips. These man-made structures serve as forward bases, extending China's reach and enhancing its ability to project power in the region. Chinese Coast Guard vessels regularly harass fishing boats from other nations, disrupting their livelihoods and escalating tensions. These confrontations often lead to dangerous standoffs, with smaller vessels at the mercy of larger, more powerful Chinese ships. This aggressive posturing has not gone unnoticed. Around the world, nations are watching China's actions with growing concern, leading to widespread condemnation and calls for restraint. The international community has condemned China's actions, recognizing them as a threat to the rules-based order that governs the seas. In response, several countries have conducted naval exercises in the region, demonstrating their commitment to maintaining freedom of navigation. But the consequences for China extend far beyond diplomatic rebukes. The ongoing tensions have strained China's relationships with its neighbors and major global powers, complicating its foreign policy and economic ambitions. The economic fallout of its actions is becoming increasingly apparent, casting a long shadow over its ambitions in the region. Trade routes are being reconsidered, investments are being re-evaluated, and the overall economic stability of the region is at risk. As China continues its costly gambit for dominance, the true price of its actions remains to be seen. China's economic miracle has been fueled by its integration into the global trading system. Over the past few decades, China has transformed itself from a largely agrarian society into a global manufacturing powerhouse. This transformation has been driven by a combination of factors, including a vast labor force, significant investments in infrastructure, and a strategic focus on export-led growth. The country's bustling ports and factories are a testament to its rapid industrialization and its pivotal role in global supply chains. Yet, its actions in the West Philippine Sea are jeopardizing this very foundation. The aggressive territorial claims and military posturing in these contested waters have raised alarms across the international community. The West Philippine Sea is not just a regional issue, it is a critical maritime corridor through which a significant portion of the world's trade passes. By asserting control over these waters, China risks alienating its trading partners and disrupting global trade routes. The world is wary of doing business with a nation that disregards international law and throws its weight around. International businesses and investors are increasingly cautious, fearing the unpredictability and potential repercussions of China's actions. The tension is palpable in boardrooms and international forums, where the once enthusiastic embrace of Chinese markets is now tempered with skepticism and concern. Headlines frequently highlight the growing unease and the potential for economic fallout. The reputational damage is significant, leading to a decline in foreign investment and a loss of trust in Chinese businesses. Foreign direct investment, which once flowed into China in torrents, is now slowing to a trickle. Empty office buildings and stalled projects are becoming more common, symbolizing the broader economic malaise. News reports and economic analyses often point to the chilling effect of China's aggressive policies on its economic prospects. Moreover, China's aggressive behavior has pushed Southeast Asian nations towards closer economic ties with other powers, such as the United States, Japan, and India. These countries are increasingly seen as more reliable and stable partners. Regional summits and bilateral meetings are now more focused on strengthening economic and strategic alliances that exclude China. The shifting dynamics are evident in the growing number of trade agreements and cooperative ventures being signed. Trade deals are being renegotiated, supply chains are being diversified, and new partnerships are being forged, all at the expense of China's economic influence. Southeast Asian countries are actively seeking to reduce their dependence on Chinese manufacturing and trade. New factories are springing up in countries like Vietnam, Indonesia, and Malaysia, while ports in these nations are seeing increased activity. The reconfiguration of supply chains is a clear signal that businesses are looking for alternatives to China. The West Philippine Sea, once envisioned as a springboard for Chinese economic expansion, is rapidly turning into a barrier, isolating China from the very markets it seeks to dominate. The strategic importance of these waters cannot be overstated, yet China's actions are creating a geopolitical quagmire. Economic analysts frequently discuss the long-term implications of this standoff, noting that the isolation could have profound effects on China's economic trajectory. The once bustling trade routes are now fraught with uncertainty, and the ripple effects are being felt across the global economy. To assert its claims in the West Philippine Sea, China has embarked on a massive military buildup. Its navy has expanded at a breathtaking pace, launching new warships, submarines, and aircraft carriers. Artificial islands have been transformed into fortified outposts, bristling with missiles and radar systems. This relentless militarization comes at an astronomical cost, draining resources from other vital sectors of the Chinese economy. The People's Liberation Army, or PLA, consumes a larger share of the national budget each year, leaving less funding for education, healthcare, and infrastructure development. This unsustainable spending spree is exacerbating existing economic challenges within China, contributing to rising debt levels and slowing economic growth. The irony is palpable. In its quest for dominance, China is undermining the very economic strength it needs to sustain its ambitions in the long run. One of China's primary motivations for claiming the West Philippine Sea is the lure of vast oil and gas reserves believed to lie beneath its waters. However, this promise of energy independence has proven to be an illusion. Exploration efforts have been met with limited success, hampered by technical difficulties, high costs, and resistance from other claimant states. China's aggressive actions have deterred foreign energy companies from investing in joint exploration projects, fearing reputational damage and entanglement in the region's geopolitical complexities. As a result, China has been forced to rely on imports to meet its growing energy demands, leaving it vulnerable to price fluctuations and supply disruptions in the global market. The West Philippine Sea, once touted as a potential solution to China's energy security concerns, has become a costly reminder of the economic pitfalls of its assertive foreign policy.